I'm Dr. Dakshayini BS, working as an assistant professor in Government First Grade College, Rajajinagar. Today I will be discussing a new chapter, that is redemption of preference shares. So let us move on to the meaning of preference shares. Preference shares refers to those shares which have a preferential rights in regarding to payment of dividend and repayment of capital. As I've already discussed that preference shareholders, they will get a preferential or first priority with regarding to the payment of dividend and also with regarding to the repayment of capital. Now let us discuss the types of preference shares. There are six types of preference shares. First one you have is redeemable preference shares, irredeemable preference shares, participating preference shares, non-participating preference shares, cumulative preference shares and non-cumulative preference shares. Let us discuss one by one all the types of preference shares. So first one you have is redeemable preference shares. Redeemable preference shares are those shares which would be paid back with the capital within the lifetime of the company. That is, the company will be running and within the lifetime, before the company could be closed down, the preference shares have to be paid back. So it may be usually after a fixed period of time. Irredeemable preference shares are those preference shares which would be paid with the capital only when the company is closed. So just note down the difference between redeemable and irredeemable. In redeemable preference shares, before the company could close, we have to redeem them. And if the company has issued irredeemable preference shares, it can be redeemed only after the company is being closed. The third type of preference shares you have is participating preference shares, and these are the shares wherein the preference shareholders are entitled for a share in the surplus at the time of liquidation of the company. So when the company goes for liquidation, then at the time of liquidation, if the company has issued participating preference shares, which means that the preference shareholders can participate even in the surplus of the company. The next one you have is non-participating preference shares, and these are those shares which are not entitled for any surplus at the time of liquidation of the company. So when the company is liquidated, then they don't have any share in the surplus of the company at the time of liquidation. The next one you have is cumulative preference shares. The shares are those shares on which dividends unpaid. If a dividend is unpaid in any year due to the lack of profit or any other reason, it would be accumulated and paid in the following years. Suppose if the company, for example, if the company was not in a position to declare dividend for the past 2 years, then suppose if the company is in a position to earn profits during the current year, then the dividend will be paid during the current year along with the arrears, that is the previous past 2 years dividend. That is why it is called as cumulative. What do you mean by cumulative? The dividend gets accumulated. Next one you have is non-cumulative preference shares, are those shares on which dividend is unpaid in any year, will not be accumulated or carried forward. So let us take for example the earlier example. If the dividend was in arrears for 2 years, then it means that even though if the company is earning a profit during the current year, it is not supposed to declare a dividend for the past 2 years. So which means that the dividend will not get accumulated. So now we'll move on to the conditions relating to the redemption of preference shares. So this is very important in order to work out the problem, students. Preference shares can be redeemed unless they are fully paid. That is, they cannot be redeemed unless they are fully paid. Which means that when you have to redeem, if the company has to redeem, then first they have to convert the partly paid preference shares into fully paid preference shares. This is the first point to be remembered. The second point is the redemption must be either out of fresh issue of shares or out of profits available for payment of dividend. So what is the second condition? They have to make the fresh issue of shares. So they have to issue the shares, or the second alternative is they can make use of the profits available for payment of dividend. So what are those profits? It may be a divisible profits, which I am going to discuss in detail in the next coming slides. Then the third condition is that if the redemption of preference shares is done out of divisible profits, a sum equal to the nominal value. What is nominal value? Face value of shares being redeemed must be transferred from such divisible profits to capital redemption reserve account. So this point you have to remember, students. Here while working out the problem, whatever amount that we are going to utilize from the divisible profits at the face value or at the nominal value will be transferred to capital reserve account, redemption reserve account, CRRA. Fourth condition is that capital redemption reserve can be used only for the issue of what? Fully paid bonus shares to the shareholders. So when you are paying fully paid bonus share to the shareholders, the amount which is remaining in the capital redemption reserve can be used. And the next point is that the redemption may be made either at par or at premium. This you remember, students. Redemption of preference shares can be made only either at par or premium, but not at discount. Premium on redemption of shares, if any, must be provided for out of divisible profits or securities premium. This also you should remember. Suppose if you are redeeming the preference shares at premium, it is nothing but a loss. Then that has to be redeemed only by utilizing the amount that is available in divisible profits or the amount which is available in securities premium account. The last condition is that redemption of preference shares must be considered as what? Reduction in authorized capital of the company. So as you all know that while preparing balance sheet, we are going to write the authorized capital. So in this problem, in this chapter, we are supposed to prepare the balance sheet after redemption of preference shares. Then we have to write the authorized capital also, and this redemption of preference shares is going to affect our authorized capital. It should also be considered as what? Reduction in authorized capital of the company. This I am going to teach you in detail when I am going to work out the problems. So students, you are supposed to by heart all these 7 conditions for the purpose of working out the problem on this chapter. Now we'll move on to the actual steps involved in the redemption of preference shares. Step number 1. I told you that is the preference shares should be redeemed only after it is converted into fully paid. So what is step number 1? Ensure that preference shares which are to be redeemed are fully paid. So it should be fully paid. The reason for preference shares not being fully paid may be either on account of calls not made or it may be on account of calls in arrears. So students, there are 2 conditions as to why the preference shares are not fully paid. The first condition is that there may be either amount of calls not made or there is calls in arrears. So the first one, this is the first journal entry. If calls are not made, okay, so show entries for making call and receipt of call money. So what we have to do? First we have to call and then we have to collect the money, call money. The following are the journal entries relating to these transactions. So first journal entry is for making the call. So first we have to call. What is the journal entry? Preference share final call account data to preference share capital account. The second journal entry is for receiving the call money. So when you are receiving the call money, debit what comes in? Cash is coming in. So what is the journal entry? Cash or bank account data to preference share final call account. You just look into the journal entry, students. In the first journal entry for making the call, preference share final call account was debited. So when you are collecting the amount, you have to credit the preference share final call account. So when the call is not responded, by whom? By any shareholder, the company after giving him sufficient time. So first the company should give him sufficient time and required notice, and then they can forfeit such shares. What do you mean by forfeiture? Cancellation. So the entry for such forfeiture is as follows. So this is the condition wherein we have made the call but the shareholders have not responded. So when the shareholders do not respond, the first step is we have to give them sufficient time and required notice. But still if there is no response from the shareholders, then we have got every right to forfeit the shares. So what is the journal entry for forfeiture of preference shares? The journal entry would be preference share capital account debtor to forfeited shares account and to preference share final call account. So preference share capital account with the face value you have to write. To forfeited shares, amount already paid on shares should be written. And then to preference share final call account, amount of call money due should be written. So this you will understand in detail when I solve the problems. So this is a journal entry wherein we are going to forfeit the shares. So for the forfeiture of shares, what is a journal entry? Preference share capital account. Why we are debiting preference share capital account? Because we are going to forfeit cancel the shares. Okay. So when you are cancelling, debit the preference share capital account. So your preference share capital account balance will be coming down to forfeited shares account and then to preference share final account. The shares forfeited can be reissued. The next one, once you have cancelled, then we can go for reissue of the forfeited shares. When reissued, the following is the entry to be passed. So when you are reissuing, what is coming in students? Cash. So what is the journal entry? Cash account debtor, amount received on reissue, forfeited shares account, amount of loss that the company has incurred on reissue to preference share capital with the face value you have to write. You look into the previous journal entry. So there what we have done, forfeited shares account was credited. Here now we are debiting forfeited shares account and then we are crediting what? Preference share capital account. Why? Because you are reissuing. When you reissue, what happens? Our preference share capital balance will increase. So this is the journal entry for the reissue of the forfeited shares. The next one you have is, if there is any balance left over in forfeited shares account, it must be transferred to goodwill account or it can be transferred to capital reserve account as the case may be by passing the following journal entry. What is the first journal entry? If there is a credit balance in forfeited shares account. So what is the journal entry? Forfeited shares account debtor to capital redemption reserve account or capital reserve account. This is when the forfeited shares account there is a credit balance. And next journal entry would be, if there is a debit balance in forfeited shares account, the journal entry would be goodwill account debtor to forfeited shares account. So these are the two journal entries for transferring the debit or credit balance which is there in forfeited shares account. The second condition for not receiving the full call amount, that is, so we have